The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Oh, welcome in, everybody. Thursday morning here in Radio Land, here in stock trading land. You know, one of the things that I just enjoy about the trading and investing business, there is never a dull moment. Even when you go through those times when maybe the indexes are kind of languishing and it seems like there's not a whole heck of a lot going on, there's always news, there's always industry news, always regulatory news, always company news. There's always things going on. So plenty of things to hold our attention. That really is one of the things I enjoy about this. And you know, it's business, it's sociology, it's psychology. It brings in a whole lot of different disciplines into this as well. And that's another thing that's really fun about the stock market. Kind of realized that a few years ago, is that so many different aspects just come into all of this business of trading and even of longer term investing. So we are, along those lines, we are in earnings season right now. That's not exactly a news flash, is it? But I want to talk about that a little bit today. A couple things that caught my attention. Now, I put up in front of you there on Tiger TV a chart for the IWM, the Russell 2000 ETF. That's just kind of, I've gotten a little bit in the habit of opening the show with that, and why not? This is the Small Cap Show. Let's always start out by taking a look at what's happening with the small caps. Now, here we've got something kind of interesting going on, is that we've got the major indexes are trading to the upside today. We've got the NASDAQ, which is perhaps most relevant, I suppose, if you're going to compare the small cap index to anything, because you get a lot of the techs in there. Excuse me, maybe not some of these fewer of these kind of blue chip names. Well, that's not really accurate either, because there's a lot of blue chips in the NASDAQ composite. But you've got the NASDAQ up, the NYSE indexes are up today, although as I'm looking at it right now, NYSE volume is up so far on the session. NASDAQ volume is lower than yesterday, but simultaneously what you have along with that is the Russell 2000 ETF. Well, now let me see here. Now it's showing, I just pulled up a real-time quote, showing that it's unch right now. So moving up from some earlier losses into unchanged territory. So we've got an unch on the IWM. Okay, yeah, that was a little surprising to me to see that this index was sporting some declines while so much else out there was showing gains. Now, just a couple little notes here today. If you are a subscriber to the Small Cap Roundup, I sent out not only the low price leaders, the show here is the Small Cap Roundup, and the newsletter that we send out every Wednesday is Low Price Leaders. And let me just take a moment to explain that. That newsletter contains, as the name of it suggests, not only low price stocks, those trading between $5 and $12, but also stocks with a market cap below about $2 billion. So in other words, we really are looking at this universe of some of the smaller names, no matter how you slice it. I do look for, usually, most of the time, though I do make some exceptions, I usually am looking for liquidity of at least 300,000 shares a day. Just because with some of these smaller names, you're already in the land of volatility where you can have one or two big institutional holders who decide for whatever reason that the stock has reached their price target, that they just want to get out. And that can really hurt an individual investor. You can get caught in a downdraft very quickly on that. So that's why I like to see some minimal level of liquidity. And, of course, as I say every show, no penny stocks. We're talking about stocks priced between $5 and $12 a share. You want some institutional ownership here, maybe some of the micro-cap funds, and so forth. So this morning, we did send out the latest edition of the newsletter yesterday. And this morning, there was a trade alert that went out with a number of new trades. So if you're interested in checking this out, take a look at the homepage, tfnn.com. You can get information about the Low Price Leaders newsletter. You can take a trial and see what's going on right now. I do really stick to the idea of only entering into trades when there is a confirmed market uptrend, and that's been tricky to find in recent weeks. As I mentioned on the show on Tuesday, and I'm sure that most of you out there have noticed, it's been difficult to see any kind of sustained trend in either direction that you can capitalize on, either to the upside or the downside. It's been difficult to see any kind of sustained trend longer than maybe 4 days, and perhaps that's changing as of this juncture. And, I don't necessarily mean, for example, say you get several days in a row of upside trade and then 1 day of downside. That's not enough to break the trend, necessarily, unless it's one of those huge price changes and heavy volume that, we do tend to see, those big market swings in one direction or the other. So that can break a trend, but not necessarily just 1 day of downside trend. I'm really looking at shorter-term moving averages at this juncture is one of the key ways that I'm evaluating these individual trades. And I do use stop losses. I'll be sending out an alert a little later today with some more information about some of the stop losses on some of these trades. And that is what we will be doing on that one. So I'll talk a little bit about, I see we've got a caller on here, so in a few minutes I'll talk a little bit about some of the methodology I'm using and how I'm determining the stop losses. It's not necessarily a percentage, because the more I look at what these markets are doing lately and talking to some of the other analysts and traders who are out there, it really does seem that maybe some of these percentages, 7, 8, 10, whatever you want to use, that is not, in many cases, that's going to get you out of some of these too late. So some of the key moving averages have been some of the better indicators lately. So as I mentioned a moment ago, we have the chart for the IWM up there, and I understand that we have a caller. Rick, you're in British Columbia?
Hey, how you doing today, Kate?
I'm doing well. Thanks for calling. How are you?
Really good. I'm just kind of wondering if we're looking for the IWM. That doesn't mean we can't pull back in the next day or two.
Mm-hmm.
To make a run to that shooting star inverted hammer with volume on May the 20th, is it? No, May the 1st, I think it is.
Let's see, May the 1st. Okay, so we're back here. Let's see here. I'm going to just pull up one of my other charts up here. We could take a look. Now, one thing, Rick, just one thing to let you know. I use very, very simple technical indicators. That's just the way I was trained. It's worked for me. So I'm not necessarily looking for some of the patterns that you were mentioning there. I'm looking at moving average support. And okay, that's a very reliable way, especially when you're looking at these shorter-term moving averages.
Well, you got the 200, which is the most reliable, right?
And I'm not waiting for a stock to fall that far. Absolutely no way. Am I going to wait and sit through something that falls down to that 200-day? I'm looking at more maybe the 15-day exponential moving average,
okay.
1.5. Yeah.
Where is it? I don't have it. Where is the 200-day? Are you able to even pick that up right now?
Sure. It's the 200-day on the IWM is at about 76.96, and right now the IWM is trading at about 80.29. Let me see. Actually, I can get you a better, more accurate quote than that. The IWM is right now at 80.29. That was accurate. Okay, so it's well above that 200-day, but I'm not going to wait for it to fall that far. ever. As I'm looking at shorter-term exponential moving averages. On the other hand, though, when I'm looking at something as a watch list name, 200-day support is not bad. I'm going to pull up a chart. Actually, this is something I just wrote about recently. As many of the listeners out there know, I do some work for real money over at the street, and one of the stocks that I wrote about yesterday was something that was finding support at above its 200-day, and that's SourceFire, F-I-R-E. And this is a security software maker. It has been something that I've been tracking for a while. I'm not necessarily actively tracking it right now. It's just kind of in the background. It pops up on some of my screens. But I put this up on Tiger TV. Nice support above the 200-day. And that's a potentially good indicator, but I want to see some of these shorter-term moving averages confirm that this is something that may be more viable in the future. So that's really what I'm looking at here. So if we come back to the IWM, and let's take a look. You know, I got to tell you something. I like the technicals on this one right now. It's just above its 5-day exponential line, and the 5-day is a little bit above the 15-day. So you've got some nice indicators on this one, and in the way that I'm analyzing these charts, this one looks, Rick, like it's in a buy zone right now, and you've got some room to run.
The weird thing is about it isn't actually weird, but the markets, historically follow the currencies a lot, as you probably know. And the euro's got hammered, and the market's actually held up pretty darn good.
Yeah, there's been a little decoupling there recently. I've noticed that too. A lot of analysts have noticed that.
You're going to have days of that, don't get me wrong. But what I see right now is like you said, there's so many technical different indicators. But if you look at the very low in the last 3 months, I see
on the IWM.
Yeah, I see an inverted head. I see an inverted head and shoulder pattern. You see the inverted head and shoulder. Okay, and that targets that high up there. And if we even get a little bit of a bounce on the euro, from my experience, 85 to 90% of the time, markets go with the currencies. I mean, there are days.
It could be.
Yeah. So anyway, I was just curious if you had any kind of a target right now as to where you think it might go.
I don't use price targets. I do not use price targets. You hear a lot of these predictions out there. I'm just using the charts and the moving averages. Volume is a secondary indicator, and just looking at, hey, is this in a buy zone right now? I mean, what I think, what the guy at Morgan Stanley thinks, what the guy at Citibank thinks, what Tim Geithner thinks. I mean, we could all be wrong. I don't use price targets.
Okay.
So, all right, hey, Rick, great call. Thank you so much. Great to hear from you, and call again sometime. Good to talk to you.
Thank you.
All right, everybody, this is the first segment wrapping up right here on the Small Cap Roundup. We'll be right back in just a few minutes.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, back here, Small Cap Roundup today for a Thursday. I'm your host, Kate Stalter. Give a call, 877-927-6648. That was a terrific call from Rick. And some great questions. He was asking some great topics he was bringing up. You know, one of the things that came up in that call is kind of funny because we were talking about price targets, and I think I explained pretty well why I just don't like to use them. It's frankly, for an individual trader, it's of no value. You can look at how the stock is trading. For example, if it is above, if your stock that you are trading, say, rises 20-25%, you know, that's the typical advance that you do see a stock make before it does pull back again. But that's not necessarily the signal that you need to sell, because if you have a cushion in the stock, you might be able to sit through a little bit of a pullback and maintain some significant gains. Now, for those of you who are watching the Low Price Leaders newsletter, you do know that on one occasion pretty recently, I did take profits in a stock at about 20%. I was not using that 20% mark, though, as my signal to sell. What I was using as the signal was a close below the 5-day exponential moving average and some indicators that the market was showing weakness again. Now, as I mentioned before the break, as we all know, no kidding, these shorter-term trends have not really been sustainable on the indexes. And in fact, as of this morning, I did re-enter a position in that particular trade. It is holding up pretty nicely, although actually, well, we'll see. It's holding up near key moving averages right now. So that was one of the buys that I did send out in the newsletter this morning. So, it's kind of funny. I may have told this story on here before, but what the heck, I'll repeat it. Is a few months ago, I was up in the New York area, and I was meeting with some folks at one of the financial news networks. And one of the anchors on there, as part of this conversation, he asked me what would be my price target on the S&P. And there were a number of other traders and money managers around, and they all had these price targets. And he asked me what mine was, and I said I don't use price targets. And I swear it almost made him mad. He just looked at me and he said, well, people like nice round numbers. And I didn't really have a great response for that. And in hindsight, I probably could have thought a little bit faster and just said, hey, but they don't help anybody. It's one of those institutional kind of markers that everybody seems to like on the investment banking side, and they probably have their reasons for it. But just in terms of an individual trader, it's not necessarily a tool that's going to serve you well. Not that you shouldn't have some markers to get you out of a stock and just to be watching them. For example, if you can tell if something gets a little bit frothy and it's well above key moving averages, short term, medium term, and longer term. But again, is that necessarily a sell signal? No. If it does begin to correct and you want to take some profits, put your money into something else that's beginning an uptrend, that's not a bad strategy. But as I said before, if you have a nice profit in a stock, you may be able to sit through a bit of a downturn. And that is obviously as long as you maintain significant profits and you don't sit through a correction that evaporates all your paper gains. So you don't want to do that. You do want to put in some trailing stops. That's very important. Once you have a profit, to put in some trailing stops so your profit does not evaporate into a loss. So just a little discussion of the trading strategy, but I still laugh about that. Sort of the look on that guy's face. And if you watch financial networks, you know who he is, but I'm not going to name him. But the look on his face was very, very funny when I said I don't use price targets. It's like nobody had ever said that to him before. It was kind of funny. So, in any case, that's where that is. I wanted to, let's see here. Our time's winding down in this particular segment. I want to just put up a chart here for the next few seconds here of something that is obviously not a small cap, but I'm going to use this as a way of leading into some of the small cap discussions after the break. That's eBay, of course, which is up significantly today after its earnings. So I want to talk a little bit about some of these electronic payment companies, because that really could be very fertile ground for some gains in the small cap arena. I'm Kate Stalter. This is the Small Cap Roundup. We will be right back after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right. Welcome back. I'm your host, Kate Stalter, here on the Small Cap Roundup today. I wanted to talk a little bit about some of these electronic payment companies. I put up a chart there of eBay, and actually I've got it on a weekly chart. I'm going to move it back over to a daily. So you see that huge gap higher today in heavier volume. It's up about 9% in more than 5 times average volume. So obviously a lot of good sentiment here regarding eBay, and as I'm sure all of you know, this is not the company that where you go sell your old stuff anymore. It's not necessarily the online garage sale anymore. This is an electronic payment company. And it's funny to me that people kind of still think about this as an online retailer. I did see an interview with the CEO this morning, and he did make the point. He said the PayPal unit is actually enabling greater shares of, greater sales rather, of the stuff they sell on eBay. So that's been kind of interesting for the company. It has provided some revenue in that sense. But this really is all about the electronic payments at the PayPal unit, mobile payments, online payments. That's just a business that's going through some seismic changes. And it's really beyond the shift to plastic. How many of you write checks very often? I don't. I think I had a box of hundreds of checks from my old address. I just keep using them. Nobody cares because I write maybe one check a month. So it really doesn't matter. I think to the ladies who clean my house, I write them a check because I usually don't have cash sitting around here to pay them. So I give them checks which have the old address, and they cash them, and everybody's happy. But, it's not just the U.S.-listed online and mobile transaction specialists. There are several international-based companies that are doing well from that space. But one U.S. company, in addition to eBay, that I've been tracking, and some of you may know that I've been tracking this one, this is Heartland Payment Systems. HPY is the ticker on this one. Now, this is kind of funny because I just get a kick out of some of these company names. You would think it was based somewhere in the Midwest. No, it's based in Princeton, New Jersey. And a lot of that's an area more known for biotech and pharmaceuticals rather than infotech, which is where this industry would be more based, I suppose. That's not a bad chart there on Heartland. I like that one a lot right now. Let's just take a look here. I've got it up there on a daily chart for you. So right now, it's trading a little bit below the 5-day exponential moving average and a little bit above its 15-day. And let me just look here. So this is pretty good because the 5-day is 5 cents above the 15-day. You've got kind of a little gentle sloping correction right here, not much of a sell-off. You've had kind of tepid volume in recent days as this has been selling off in a very gentle fashion here. So this one could potentially be a buy candidate pretty soon. If you are more a fan of some of the traditional chart patterns, you might be seeing a cup and handle pattern in this one. That is indeed the case. So that could be another way to potentially analyze this chart. I'm just liking what I'm seeing on these shorter term moving averages on this one right now. Let's see. This is supposed to report earnings next week. And what this company does, they do those bank card, the Visa, the MasterCards, all those that are issued by the banks. They provide processing services to merchants in North America. And this falls squarely into the realm of the small caps that we track in the newsletter. Market cap a little bit under the 1.2 billion mark. And I just mentioned a little while ago that I'm looking for market cap of about for trading volume of about 300,000. This is funny. I'm looking at it, 298,000 shares a day moved on average, so close enough. I think it did pop up onto my screens a few weeks ago, the ones that I had set for that 300,000 minimum. And it had popped up on those screens. The average volume fell a little bit because if you take a look here, there was some lower volume back in here, so that's going to bring your average down, but close enough. So that's Heartland Payment Systems. Let's just for fun, let's take a look at some of these larger caps because really the whole industry. I'll just pull up some of these charts. I was looking at them this morning. You've got a daily chart of Visa. Looks pretty good right now. You've got MasterCard holding above that 50-day moving average. MasterCard consolidating a little bit, but still looking pretty good. And just a terrific history of revenue and earnings growth on these particular names, as you would expect. Now, sort of the little stepchild from that group there, from that little group of companies that you would consider some of the credit card companies, so to speak, would be Discover Financial Services. This is funny because this is just not one you hear about. It's not doing as well. They just don't have the traction. They just don't have the same user base that Visa and MasterCard. I mean, when you think of them, you think Visa, MasterCard, maybe American Express, right? But you don't think Discover naturally. Now, I'm sure there's people out there who say, yes, I do, because that's my favorite one. But you're pretty unique if you're saying that, because for most people it really is about the Visa, MasterCard, American Express as a corporate card. I'll tell you something. I'll give you an example. I volunteered at the Santa Fe International Folk Art Market last Friday night. It was a whole lot of fun, and a friend of mine brought me along to volunteer at the cash registers. So I got the job of running everybody's credit cards, which was interesting. It was a lot of fun. But I got to tell you something. I did not see a single Discover card. There was Visa, there was MasterCard, there was American Express. And this is just occurring to me right now as I'm sitting here talking about Discover. Let's get the chart up there. I'm sorry, I left the chart of MasterCard up there. I didn't mean to do that. There we go. So I put the chart of Discover up there on Tiger TV. Now, the chart doesn't really look all that bad, but the fundamentals of this are just pretty lackluster compared to some of the others. And it just dawned on me now, I did not see a single one all evening. And we got pretty darn busy with that. And by the way, if you've never been to the Santa Fe International Folk Art Market, if you like artisan decorative arts, jewelry from pretty much emerging markets, as they're called around the world. It's a whole lot of fun, and I recommend that you go because it's a very, very nice time. Okay, so let me move on here. Let me show you one small cap name from this transaction processing space, and this is one that has, I think I've talked about this a little bit before. It's called, the ticker there is CATM, Cardtronics is the name of the company. And I'm going to put this up here on a weekly chart to kind of make the point I was thinking about. Now, you take a look at this, and in some ways, you see, this is not a very exciting chart. This is actually a chart that looks like it would be for a large cap stock. It's just kind of trending along in a very orderly fashion there, along key moving averages. I mean, very, very nice support it's gotten recently. And let's see here. Fundamentally, just looks terrific. Double-digit revenue and earnings growth in the past year or so. Let's see, revenue growth in the double digits for the past year. You can say that about earnings growth for the past 2 years. Wall Street expecting 19% earnings increase in 2012, 17% in 2013. Now, this is a Texas-based company that operates a network of ATMs in stores, that sort of thing. You know, when you go into those places and they want to charge you $35 to, I'm exaggerating, but you know, $2, $3, whatever, to make an ATM transaction. And sometimes you're desperate and you just have to do it because you need the cash right away. Not that that's ever happened to me, but that's a lot of what these are doing right now. They're in that area. So yeah, stands to reason they would be raking in the bucks with that kind of thing. So this company has confirmed it will report on July 31st. And in some ways, the fact that this is not a very exciting chart is a very good thing. And that shows nice, steady price action. Let me see here. You've got... yeah, this has really held up very nicely, and that boredom factor could be something that could be quite reliable. You don't often see that kind of thing in a lot of these smaller names. Let me just see what the trading volume on this one is. Yeah, about 235,000 shares a day on average. So not bad. Will be interesting to see how this one acts following that earnings report that it has confirmed on July 31st. So that's just a pretty interesting little subsector of infotech, which it really is. You know, some places categorize this area as finance, but it's funny because when I talk to a lot of the fund managers and they talk about being in MasterCard, for example, they consider that to be really an infotech. So that falls under their infotech holdings when you look at that. So Okay, so that's that group. I wanted to also take a look at what we've got. We've got a couple IPOs today, and I had mentioned that in Tuesday's show, and let me see if I can pull up this one. Okay, let me pull this up on a daily chart. You're seeing there on Tiger TV just one big old block. And that's because we only have we have less than 1 day of trading. We have a few hours of trading. Ticker here is FIVE, F-I-V-E. Five Below is the name of the company. Now, I personally have never seen these stores. I don't think they are in the western part of the United States. I travel a lot, but I haven't noticed them when I've been in the Midwest or the East either. Maybe I just hadn't either noticed them or just hadn't been where I was. These are discount retailers targeted at teens and preteens. Sounds like it's kind of a 99-cent only store, in a sense, dollar store for kids. Kind of interesting. So this went public today. It was priced at 17, way above the range. The original range that the company had been proposing was 12 to 14. That was up to, I forget what it was up to, but it was increased, and then it was priced at 17, and then you see where it's trading now at about $27.70. And this was a relatively small deal. They were attempting to raise, let's see here, they wanted to raise about $154 million, so obviously they did raise more than that, but nonetheless, you see, that would have been still a very small deal. This company, according to Renaissance Capital, booked $322 million in sales for the 12 months ended in April. And as I mentioned the other day, you had some pretty heavy hitters among the underwriters: Goldman Sachs, Barclays, Jefferies. So that tells you that there is some serious confidence in this particular company. So that's an interesting one. We had another one today, a biotech. Not really doing as well. Let's see if I get the ticker right here. Yeah, Durata Therapeutics, DRTX. Now, this one priced at $9, and I think that was below the planned range. I think they had wanted to raise a little bit more than that, and let me just look up a couple things here. Looks like, yeah, they priced at $9. Below the range. Oh boy, they had originally planned to offer shares between 11 and 13. So not really such an auspicious debut, but you know, I've seen this before where you see companies that do price below the range, and of course that sounds very, very discouraging at the beginning, but they can very often, as they undergo their trading in the subsequent weeks and months, they do become pretty good stocks. Now, of course, in the biotech area, as we discuss here a lot, you see these that frequently just don't have any earnings to speak of. They are frequently quite speculative. They need the money, and often they are acquisition targets. Now, this one wanted to raise $68 million, so as you could tell by that, very small deal on this one. So you've got two IPOs today. You've got a few more coming up tomorrow. Fender, Kayak, and Palo Alto. So busy week for IPOs. Busiest since the Facebook IPO back in May. All right, I will be back in just a few minutes with the last segment of today's Small Cap Roundup. Stick around.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
All right, last segment of today's Small Cap Roundup. On the break there, I was just taking a look at some of the movers today. I'm seeing quite a few of the mid-caps that are some of the big movers, but being that we are on the small cap show, I wanted to kind of focus on some of those. So I'm kind of looking at my recent IPO screen. This is one, obviously, where I track recent IPOs, just as it sounds. And let's see here. We have Rentech Nitrogen Partners. RNF is the ticker on this one. Let me just take a look at where we're at today. Yeah, this one, now this is interesting. Actually, I wrote about this one recently as well. It's been popping up onto my screens. I kind of like what this one's doing. It's getting support right now at the 5-day exponential moving average. This one went public in just back in November, so not too long ago. Now you see here, I've got it on a daily chart. You can see that big pullback. Let me put this up here on a weekly. You'll see the same thing. Pretty sharp pullback, and of course, being a part of that fertilizer group, and I should say Rentec Nitrogen Partners. That probably gives you a clue of what business it's in, but it is in that same business as Potash, Mosaic, CF Industries, a lot of these bigger names that everybody knows about. This is obviously a younger, newer player, market cap of about $1.1 billion, trades about 370,000 shares a day on average. And this is one, you see that big decline here. Obviously, it's going to be most likely sharing in the fortunes of that fertilizer group. And, of course, with the drought, with all the concern about what's happening with the corn crop and so forth, you are seeing some renewed interest in some of these. Now, here's another little weirdo that I want to put up here, and this is really thin. I've talked about this one, but it's called Home Street, HMST. I know I've mentioned this one on here before, but it's just another one of these, as you see there, with a chart that is of some interest. And the reason I say as you see there, you see that if you're watching Tiger TV, you see that big move up last week. This is a Seattle-based one of these community banks. The interesting thing about this one, they went public pretty recently as well, back only in February of this year. Now, what happened on this one is this company really did suffer greatly in the whole financial meltdown. They were really just a breath away from going under. They brought in a new CEO who has turned things around. He and his new team decided to capitalize the company via an IPO. So that's what happened here. And so far, so good. So far, it's traded in a pretty nice fashion, and you do see you kind of had your typical little rally here after the IPO, a little bit of correction. I'm showing this here on a weekly chart, and then it bolted higher again. So this really does illustrate the typical pattern that a lot of these newer stocks form, including Facebook, where they might rally, and of course Facebook's rally was only for about 30 minutes, and then it pulled back. But nonetheless, they all rally for a bit. This one for a few weeks, pulled back, rallied again. Looking pretty good here. It will be interesting to see how it establishes its further trading patterns. The part about this one, though, that gives me pause, that's a funny expression, but I like that, is the fact that it is only trading about 24,000 shares a day on average, very thin, has a lot of risk inherent in that one, so you got to put in some tight stops. I know we were talking about that recently. This is not one I'm in right now, but I do track this one. All right, that's a wrap for today's Small Cap Roundup. Check out the Low Price Leaders newsletter on the homepage of TFNN.com. Have a great weekend, everybody. I'll be back on Tuesday.